Hi everyone, welcome back to the show, and today we've got a doozy for you. Today I'd love to talk to you about trading structures and making sure that if you're starting a business, getting it done right, or if you're in business, chatting to us as your accountant to make sure that the right structure you're in at the moment is beneficial for the future, because I have to say there's an economic upturn coming up at the moment. So stay tuned and we'll chat to you in more detail soon.
Well, it'll be a great intro to your show this week. I couldn't wait to talk to you about this. You said there's an economic upturn coming. We can see in West Australia where we are that the mining industry is starting to open new mines and so forth. There is movement coming in. And this is probably a time when you're either setting up a new business to get your structures right, or you need to take a look at your existing business to make your structures right.
That's exactly right, Michael. It's I'd love to tell people things are on the up.
Yeah.
You know, we're offered in our area in Inglewood, we've got offices being leased out that have been vacant for 12 plus months. We've got people getting more revenue in their businesses, clients of ours that are getting more revenue in their businesses
that they were previously struggling. The luxury market's going up with more cars and more luxury bikes and properties being sold.
That'll make Alf Barbagallo happy.
Most definitely.
The luxury car dealer in Perth.
and I went to a property seminar last week, and the property's gone on the rise. So I have a really good feeling for WA in the next 6 to 12 months. So may not be as big as it was, in the boom time, but
it's turning around. It is interesting you say that, because I've been looking at some commercial premises and I've noticed that they're starting to move now. The incentives don't have to be as great anymore. They're starting to move. But I suppose one of the things that a lot of people, when booms come along, they miss out. Let's say they miss out, or they're not able to capitalise. And a lot of my history has been that I have a look at the structure and they're just not able to capitalise. What is it about business structures that makes it so important from an accounting perspective to be able to capitalise on these upturns?
Well, the biggest thing I've seen is people that are coming to us as new clients. I've looked at their structure and going, hey, for whatever reason, your previous advisor set you up with this entity. Okay, that may have been good 5-10 years ago, but your situation has now changed and your accountant's never reviewed it. So why? For example, people that are earning $150,000 taxable income are still trading as a sole trader. I'm like, there's a lot of ways you can maximise that by trading through various other entities. And that's where we're seeing a lot of people go, yeah, I'm actually doing all right. Why am I paying, upwards to 45% tax?
Yes.
So there's a lot of people that are coming to us and realising, just having that conversation with a fresh set of eyes and realising, hey, maybe I should try something new.
There's a lot of things with businesses, and we hear talks on both ends of politics now talking about, I call them death duties. I don't care what they call them. I die, I pass my inheritance off to the kids, they're going to pay tax on it. And I hate the thing, actually. But anyway, but the rich, it doesn't bother them because they're already structured correctly. For a company, it's very similar, isn't it? You need to structure your company to protect your money and your assets.
That's right, and that's why company structure is one of my favourites. For a business that we know, and you as the client or the starting business owner knows that it's going to grow into, a mass revenue earning business.
Yes.
Reason why I always go, okay, cool. Yes, it's the most complex structure and most expensive to set up and run accounting-wise day to day.
Yeah.
But if you know you're going to make hundreds of thousands of dollars of profit, you might as well cap that at the company tax rate, which at the moment is 27.5%. That's one of the biggest benefits of the company. But you hit the nail on the head with protecting your personal cash and personal assets. And for example, if you're a sole trader and you get sued, or your insurance doesn't cover something, or your creditors, or the litigation is going to come for you in your personal bank account, your family home, your kids' assets, your wife's assets, all that stuff, because you are the business.
In WA, we're in Perth, West Australia. Now, I dare say it's very similar across some of the other countries that are probably listening. But in WA, we do have a predominant number of family-owned businesses. They're owned by the family, they're run by the family. Yes, they have employees as well. Are there certain aspects to having a family-owned business that they need to be aware of from accounting?
Most definitely. It's one of the things I look at is each client that comes to us, I look at their each individual situation because, as you know, every client has a different story.
Yes.
You may be slightly older and you've got over 18 age children, which you may want to distribute some profits through to, and what's the benefit? What's the best way to do that? You may have newborn kids, and well, hey, yes, I've got kids, but is a trust structure going to be the best for me because I can't really distribute much to my under 18 aged kids? So, and what's my best terms of asset protection? Is the trust structure solely going to be best for me, or should I just go through the trading company and have a few various different ways of shareholdings and things like that? So each client is different. And that's what I like to say is let's look at your each individual situation and see which structure is the best.
What's becoming really popular now, and I know when the upturns come, family-owned businesses say, let's have not a board of directors, because you've got to pay a board of directors, and then you've got to do what the board tells you. But they put in these advisory boards, and they seem to invite their accountant onto the board. I mean, they pay them for their time, and they sit on their boards. What's the benefit if you're having an advisory board just to get a better perspective of your business? What's the advantage of the accountant being on that board with you?
Well, with family-owned businesses, you most times your eyes are just tunnel vision. So having that third-person financial advisor, accountant on the actual advisory board will show you with the numbers how the business is actually going. If you're a larger owned family business, we can go into a bit more detail in terms of where money is going, what's the return on investment on each asset purchase. For example, if you own a farm, what's the cost of this tractor and how's that going to go? It doesn't really matter how large of a business needs to be. We do that with smaller family-owned businesses as well. But at that larger family business level, you really need to ensure that the money that you're spending is going to be worthwhile to project your revenue.
Do you find when you're on one of those advisory boards and you're dealing with the family, you've got the boss, either mum or dad, or both, and then you've got the kids getting involved. Do you find that being on there as an independent, you're able to just take the emotion out of things and give really advice that they can all relate to?
Well, I've been in a few of those meetings, and yeah, you're exactly right. Mum and dad, you've got your two uni-aged children there. Everyone's squabbling which way they want to direct the business because the kids know they're going to inherit it. Mum and dad are retiring in the next few years, and we just have to stop everyone and go, hey, listen, let's just look at the facts right now. Yes, you are retiring in 2 to 5 years. Which one of your children is going to take control? Are both going to have equal control? Which one's a lot of the times one's more of a hands-on person and the other child's more of a numbers person. So in that sense, who's going to be the office person, who's going to be the hands-on, and make sure that we're all working together because we want the business to continue into the future.